All right, boys, we are back. All right, we just hit up LV. You know what I'm saying? We copped some cologne, some LV cologne. I also did cop some sneakers. Hold up, peep this. Look at this fat ass bag, bro. Look how big that bag is. And yeah, I'm too lazy to take out the sneakers, but just some basic LV trainers in black. You feel me? But yeah, boys, so for today we are going to talk about asset divergence. Okay, you guys probably know this is an ICT concept called SMT divergence. That's a stupid name, it's a made-up name. I don't call it that. It's called asset divergence because, well, it's a divergence between two assets in the same class. We're going to be covering gold and silver. We're going to be covering ES and NQ, as well as, guess it, it's Euro USD and GBP USD. Okay, so three very common pairs, three very basic pairs. And don't forget to like, comment, subscribe. Okay, guys, follow me on the gram too. Follow me on Instagram. We're gonna tag it down in the comments or the description. And yeah, let's get into the video. Okay, what is asset divergence? Okay, you guys might know this commonly referred to as in the ICT community as SMT divergence. It's a completely fraudulent name. It's a made-up name, and I'm gonna tell you why. Okay, because what is actually going on? Okay, a divergence is occurring between the price of two assets under the same class. Silver and gold, ES and NQ, which is SPX and NAS 100, GBP USD, pound versus the euro. Okay, let's just cover it formally, okay, of what it is, right? So asset divergence, what is it? Divergence between the high and the low of two assets under the same class, and it allows you to take a potential reversal trade. Okay, why does this work? Is because, well, since there's a mispricing of an asset, one asset might already be showing that it's making a certain move or going in a certain direction based on established order flow, and then the other is just lagging behind, right? All it is, and then it's a hidden reversal signal to tell you, hey, the one that's lagging behind, you can take a potential move off of. Okay, so for examples, we only want to do this between common liquid pairs. I know you can use this between a lot of other pairs. You can use this with the yen pairs. You can do this with other pound pairs. And I know you guys might be asking, oh, you know, there's another indice, which is YM, the Dow Jones, but I don't even want to cover that. Okay, it's a very you know, it's a popular pair, but in terms of the criteria of why I have it structured like this, it's going to give you a lot of insight into why it works like this. Okay, so again, what we want to do is when you're doing an asset divergence, okay, I've already taught you guys about normal divergences, right? As you can see right here, this is a normal divergence, right? Crazy. And when you're doing a normal divergence, okay, what's happening is the RSI is giving you a hidden set of data, okay? It's a mathematical calculation telling you the relative strength of a certain move, but it's using certain price data to give you kind of like that visualization, and that's why it's an indicator, okay? So we want to think of it as like something that's hidden or something that's less known or kind of being derived off of as the base, and then on the trade that you take, the execution is going to be your popular pair or like the actual pair. And in this case, we want to go from not popular pair to popular pair, okay? And if you look at the examples I just put right now, this is how you have to have it structured, okay? GBP USD is overlaid onto Euro USD. Silver is overlaid onto gold, and Nasdaq is overlaid onto ES, which is SPX 500. Because again, these pairs are less popular than the pairs that are superseding them. Okay, and this is how it works because you don't want to be. Because for example, you might be asking, oh, what if Euro USD makes the higher low, and GBP USD makes the lower low? You might be so confused, like, oh my god, like how do I do it? Because there's two different variations. You don't want to make it complex. You only want to use one version of this, or the actual version of this, and then only look for setups like this. Okay, very simple. Okay, so let's cover it. I have an example right here, a very basic example. This is gold up here, this is silver up here. Okay, and what's going on? So silver is moving, right? Gold's moving, and silver in real time is making higher lows, right? You can identify this in real time. Okay, at the same time, gold though is making lower lows. Okay, and like I said, you want to overlay this onto gold. Silver overlaid onto gold, as with this arrow. Okay, and when this is happening in real time, this tells you a potential reversal signal to take a position on gold, a buy on gold. Okay, and obviously you'll be able to figure out these positions in real time with your candle closure. I've already made a video on that, but essentially on the lower time frame, after these lows and lower lows and higher lows are established on the pairs respectively, you'll be seeing some type of candle confirmation on the 5-minute that is, or 3-minute or 1-minute that's engulfed, that shows that order flow is now shifting and the reversal is probably going to be imminent now. Okay, and essentially, like I said, you want to take the trade on this pair, on the top pair, which is gold, after you see the divergence occurring on silver. Okay, so now I'm going to show you a couple of examples on the charts. We can also cover some examples for GBP USD onto Euro USD, as well as NQ onto ES. Okay, but as you guys know, I only specialize in gold, so I kind of want you guys to be trading gold because I think it's the best pair. But obviously, a lot of you guys might be trading different times. You guys might have other interests, and yeah. All right, so let's get into actual examples now. All right, so this is an example that I have set up. We just got it right from the get-go. Didn't really want to waste your time, but this is my whole point. So obviously, I should have put silver here and then gold here, but the same principle. Okay, we're mapping silver onto gold. Okay, so for example, silver made a lower low here and gold made a higher low here, and what that tells us, we want a long gold. Okay, and where would you enter? How would you enter on this? Okay, you would enter on a candle closure. Okay, so that bullish candle closure right here, okay, when this candle closes on the 5-minute, okay, you want to enter on that. Okay, simple, it confirms it. Okay, that's the trade. So now stop loss with the low, pretty simple. You go for the, let's say, 3RR, right? Boom, TP hits. Very simple. Okay, very demure. Nah, but yeah, some more examples. And again, if you in real time, right, you're going candle by candle, okay, you might say, hey, this made a low, this made a higher low, but then again, what did this do? This didn't do anything. Or remember, you want to look at this one first, silver first. Okay, silver onto gold. I'm gonna keep saying that multiple times, but nothing happened here. There's no miscorrelation, right? So there's nothing for you to take advantage of. Okay, but obviously you'll notice that this happens in, well, real time, and then, well, you long gold. Okay, now if we were to just flip this, right, if we were just to flip this, we're gonna do Alt I on this. Okay, Alt I to flip this. What's going on? Same principle. Okay, if you want to look for shorts, okay, silver has to make the higher high, okay, and then gold is gonna have to make the lower low, and you short gold. Okay, you would enter on that candle right there, and then that's how you would do it. Okay, going for that 1 to 3, same principle. Okay, and obviously remember, these highs and lows happen on every single time frame, but you want to do something kind of on the higher time frame. I'd say 5 and 15 is pretty good. This in itself is a simple strategy. You can literally test this, right? But yeah, that's how you do it. Let's look for some more examples. And again, guys, a big thing that I want to say is, remember, risk management is critical. Okay, you want to be going for something statistically significant. So for 1 to 2, 1 to 3, we're not talking about scalping in this video, but if you go for 1 to 2, 1 to 3, and any variation above that 1 to 2, it's statistically significant usually. So you can make a lot of money just by doing that, right? So maybe let's see right here. Okay, another great example, okay, that you see in real time. Price made a higher high right here on silver, okay, and what did price do on gold? It made a lower high. And what does that tell us? It tells us we want to look for shorts. Very simple, okay, and we'll be entering on that short on a nice candle closure like this one, stop loss above the high, and you'll be going for your RR, any variation of RR. This goes for 1 to 2. This one ended up going for all the way to 3.6 RR, but if you want to go for 1 to 3, 1 to 3, right? Very simple. But again, you identify these asset divergences when the candle closes, okay? Very simple. This would be established on this candle. These highs would be established in real time on these closure right here. After this kind of closes, you'll be able to see it directly, and you have to be fast. It takes practice to being able to execute in real time, but this is how you do it. Okay, let's look for another example. Okay, because again, these are happening a lot, and it's kind of obvious when they're happening. Another example of something that's of it not working. Okay, so for example, okay, what is price doing right here? Higher high, right? What is gold doing? Higher high, right? No correlation, no nothing. Okay, what's going on right here, right? Oh, another example, right? We're making higher highs, okay, and what are we doing right here? Nothing significant, no significance at all, no significance at all. And this is actually probably an example of like a hidden asset divergence, but we don't want to call it that, or we don't want to worry about that. Like I just said, we're only looking for one very strong variation of all of this. Okay, let's see here. None right there, none right there. Let's see. Let's keep going back in time. Yeah, we don't have any going on, right? And this is in the last like what, 4 days, right? Let's keep looking. And remember, these setups when they happen are very powerful, right? Great example. I totally missed it. Okay, what happens right here? Okay, remember this is the same chart. Silver makes a higher low. Okay, gold makes a lower low. Okay, and then you long gold right there on that closure. Okay, pretty simple. Now again, you have to identify these in real time. It's not going to be easy identifying these in real time, especially if they happen like days apart, but that's why you have a certain time frame. Okay, you say, hey, I'm going to standardize this, I'm going to make this mechanical, and I'm very big on mechanical systems, guys, and mechanizing things. Let's say I'm only taking a trade from 5 to, and this is CST, so 5 p.m. CST to 12 p.m. CST. And then you just look for this during that time, right? That's literally how you make a system. And you go for, let's say, every single time a 1 to 2 RR trade. All you need, okay? Boom. That's another great simple example, okay? Now, we're not going to cover ES and NQ. I thought we will, but it's the same exact principle. It's literally same exact thing that I just showed you. You're going to change this ticker to NQ. You're going to change this to ES. And honestly, let's do it. Fuck it. Why not? Let's do it. Let's type in NQ. Let's type in ES. Because I know you guys love trading ES. Okay, perfect. Okay, so we're looking for NQ to make a higher high, and we're waiting for ES to make a lower low, or excuse me, lower high or higher low, lower low. Okay, or higher high and lower high. Simple. Okay, so let's actually go here. Let's maybe just go to recent price action, see if we see anything. Okay, nope, we don't see anything being made. Right here, what did NQ do? We made a higher high on NQ. We made a lower, why do I keep saying high? We made a higher low, and then on NQ, and then we made a lower low on ES. What do? We long ES. Okay, obviously this closure would be very aggressive. You can probably tighten up your stop like that and go for that 1 2 2, and obviously it does end up hitting. This is going to be a very long trade to resolve though, but it does work out. Now obviously if you're going for anything lower than that, 1 to 1.5, 1 to 1, whatever, it would have hit regardless. But that's just one example, okay? The principle still is there. And this is the only variation you should be looking for, okay? And again, let's reiterate that, okay? Just want to show you guys one more time if I were to invert these, okay? Invert these charts, okay? You're waiting for NQ to make a lower high, and you're waiting for ES to make a higher high, okay? But remember, it's always, you're looking at the base first. Always identify it on the base, okay? So, lower high, oh, my bad. Lower high, higher high. Wow, crazy. And what happens right here? Lower high, higher high, you short right here. And literally, it is that simple to make money with this. Okay? You guys saw it live. Can't make it up. But yeah, I don't think there's anything really for me to cover. That was pretty simple. Remember, these can happen on any time frame. The 15-minute as well, 30-minute. Remember, market and highs and lows are always going to be fractal, and you want to have like a time frame that kind of shows you the whole picture, but still like a medium time frame. So 5 minutes, honestly, really good in my opinion. And again, same thing applies to GBP USD and Euro USD. And yeah, I don't really know what else to say. As always, like, comment, subscribe. I hope this was helpful for y'all. Follow me on Instagram. We're really trying to grow that. And drop a comment below, guys. Like, let me know what content y'all want to see. Let me know if this helped you. And if you can maybe, you know, employ this in your trading. And I hope you do, because, well, it's literally money printer. Like, if you just follow everything that I told you. But thank you guys. I'll see you on the next video. Peace.